What is up, people? Uh, what's up, everybody? Hope you personally had a good weekend. Uh, Mine was eventful. I went up to see my parents. My son's car exploded on the way up there, so we had a little car problems. But overall, besides that, the weekend was pretty good. I know I was unplugged all weekend, come back, and it's still kind of hanging around. So I thought I'd do a quick update on what I'm looking at on the charts. See if you guys are looking at the same thing. Right now, we're in this in this area consolidation. So from a trading standpoint, you're not looking at much. I really don't want to do anything while it's in this range. I kind of want it to either break down below 10.3 or break above 12.3 before I do really anything. But let's take a look at what's going on. The things that are on the chart, I got the black lines here are the trend lines. I got the ADX under here. The black line here, along with the green and red directional index lines. I have two moving averages on here that I'm looking at, and that's the 21 and the 55 exponential moving average, and this is the daily against the Bitcoin against the dollar. All the rest are Fibonacci extensions or Fibonacci retracements and extensions. So let's look at it a little closely here on why I'm looking at these particular Fibonacci lines. Starting way back in July of 18, we had this trend line here. We broke down at this point, and everybody knows that disastrous move to 3100, kind of an area of capitulation. But one of the areas that I was looking at was the actual breakout point, which is this dotted line that goes across the screen. As we were coming up out of this, a lot of times, I turned bullish way before this, but this was kind of a significant level to look at because as this broke to the upside, what we had right here is we had this retracement back off of this leg up to this point, and the 61.8% level was right at 62.90 at this point right here, and it held with some support. So as this came up and held with support, it bounced and made a new high, and then it worked its way down and held support here, and then worked its way to the upside. So what I like to look at is since this held and kept this trend going here, take this low at this point as another starting point, and this whole entire leg here gives you a 61.8% level right at this point, which is right around 9100, and everyone knows that number because as this came down here and tested the 9100, it was right at that 61.8% level. We did pop back up and came back down and retested. So if you kind of look at this little area, there's kind of a move up and then a full retracement back to the previous low. So now what I'm looking at is the next Fibonacci level of this low to the high that we've seen. Couple of interesting things. Two of the key Fibonacci levels I like to look at is the 38.2% level, which is that shallow Fibonacci level that I like to see hold for stronger bullish moves. But then again, the 61.8% level that should hold to keep the trend going to the upside. So the two moving averages are kind of coordinating along with those. So right now the 21 exponential moving average is getting close to the 38.2%, and the 55 exponential is right around the 61.8%. I like that we're holding in here, and we're holding this shallow support. So hopefully we can pop up out of here and get out of this consolidation and move to the upside. If this is a little bit of a bullish flag, if you take let's do a quick like a little quick extension. If you look at this move right here up to this point, and if you start it from the low where it's at today, if it holds that low, then the target for the move to the upside is probably going to be about 14.3 if this actually works as a flag type pattern. But if this does break to the downside, that 55 exponential moving average would be the next spot, which would be the 61.8% level at 10.3. That's an area that I would like to add more. The only thing I would be looking for is if this dropped and momentum started to build for the bears, then I would look for a full retracement back to that previous 9100, because that level to me is pretty strong. But right now I'm thinking that it's going to hold. I know it's kind of a, we're in no man's land, so it's kind of a tough call. But one of the things that I look at, and I have other things I look at behind the scenes, but I'm just showing you the ADX today. One of the things here is this ADX. Yes, it is leveling off, and it's in an area where it's not real strong for trend, which makes sense because we've been consolidating. But one of the things that I like to see is, as the price comes down to this support level, the negative directional index is not wanting to climb, so the divergence between the move to the downside and this kind of like, I don't want to really build any directional movement for the bears, is a good sign, as this is not crossing right here. Yes, they're both working to the downside. So in other words, that to me, from my experience, shows a corrective move. So in this case, since we're in a bullish market to the upside, then this is a corrective move against that bullish trend. So it's just a bearish correction in an overall bullish market, according to this indicator at the moment. Now, if this breaks and the ADX starts to increase and build trend, and then the negative directional index starts to increase, that's when I bring the 61.8% level, or even the 9100 back into play. But the way things are looking now, and the internals are showing a little bit more support for the bulls. I like that either A, we're going to consolidate a little bit more this week, which is most likely. But then again, if out of consolidation, I'm still leaning to the upside, so I'm still bullish to the upside with this market, to hopefully break to a new high, and get that 13.8, maybe even that 14.3 target that we just talked about. Now I understand why people are still bearish, because if you look at the market, we still got this these lower highs here, and until we make a new high, I know a lot of people aren't going to be extremely comfortable buying here, because it could very easily come to the downside. But I do like the internals that it's holding support here. So I don't want to ramble on too much more. So I just wanted to show you that chart. Actually, another chart I could show you real quick. Somebody asked for it today. It's an XRP chart. I told him on the phone that it's dog shit, so I just wanted to show him what dog shit looks like. So I sent this chart. I know there's a whole bunch of stuff on here, but I'll go over it real quick. One of the things I saw here was the 61.8% level here. When it broke, it went down to a full retracement at this point. So there's full retracement at this level. So that now when you take this leg this way, the 31 or the 38.2% level here held. So when I was talking about those shallow fibs with continuation of trend, is not a good sign if this holds as resistance to work to the downside. So you got a shallow fib hold, you got key resistance to watch at the 21 exponential moving average here. You had the bearish crossover. Your RSI is still in a bearish zone. Yes, it's getting relatively close to those oversold conditions, but it's not. It's still got room to run. The momentum is actually increasing for the bears on the ADX. So I'm going to follow this 21 exponential moving average as a guide of resistance. I wouldn't be surprised if this works its way down and pushes down to new lows. And I would put a target on this, off of this here. This would be like an extension off of that at the 127%, which is like 21 cents. So if we break 28 cents to the downside, you get into kind of no man's land. So I think that extension would be something to look for. So if you looked up if you opened up a dictionary and looked up the word dog shit, it would probably have a picture of this chart. So I'm not real happy with the way this one's looking at the moment. So that's a quick charts for BTC and XRP. So hopefully it doesn't flip on me and XRP rallies and BTC drops. Then this would be a really terrible video. So any questions, comments, concerns, just check me out on Twitter. I'm at FiboSwanny. Just DM me or message me, and I'll be happy to help with any questions, comments. All right, take care. Later. Peace out, and happy trading.